let's talk about the market shift. So continuation vehicles and secondary is very hot in the private equity world. They're starting to really take the place of M&A and IPOs. We're seeing, private equity not doing the public, uh, offerings. What do you think this shift means for investors, sponsors, and LPs?
Well, it's funny. I always go to sort of economics 101 in MBA classes. Generally the formula for private equity exits have been one, if you can get a cash exit, right? That's whether it's strategic or another private equity, etc. That's obviously a very plausible outcome. Second, generally was the IPO, right? And then you generally run a parallel process with the public refinancing or partial exit and a cash exit. And secondary sort of emerged in the recent years. I think it's obviously a interesting option. Um, when you think about the numbers of exits via secondaries in 2020, it was about 5% private equity exits were via CVs. When you look at today in 2024, it was 20% of exits were via CVs. The public market is open, whether it's IPO or SPACs. And I do think that, we obviously have seen a number of highly successful IPOs, highly successful de-SPACs, hopefully including ourselves, just happening. So the public market is open, and my view is um, sale and IPOs or SPACs or public market avenues should be number one and two. I don't think CV should be option two. It should be option three. It's fine for it to be an option, but not necessarily, or certainly should be not an option one. And so we are definitely seeing from our SPAC perspective that we are competing, in some large transactions, multi-billion-dollar continuation vehicles that are being raised. And so I ask myself the question, has the public market avenue really been sort of pursued here by some of the sponsors? I think, one of the things that I think sponsors may not be frankly aware of, the benefits of a SPAC transaction is, unlike an IPO, which is very public and you're going in and testing the waters, and it's everything is happening over a period of, months and months and many times years, and it's very public. SPAC allows you to actually test the public market in an extremely discreet manner. And so, if that direction doesn't make sense, it's nobody's going to find out. And so I do think it's a very viable way for private equity sponsors to explore the public avenue in a much more discreet format.